Warren Buffett explains how to invest when stocks are overpriced. Hello and welcome back to Wealth-ology. For today's video, we will be going to talk about Warren Buffett explains how to invest when stocks are overpriced. Let's get started. The stock market has experienced one of the biggest bull runs in history since 2008 market meltdown. If we step back and look at the stock market over a long period of time, we notice several intriguing trends. The Russell 2000s has risen past 2,000 points as a result of the nearly 500% increase in stocks. A large portion of those gains happened just 1 year ago, when it more than doubled from 1,000 points to what it is now. Now that stock prices are high, many investors are left asking what is the best strategy to invest. When it comes to investment, as usual, I enjoy visiting Warren Buffett to learn his opinion. Buffett, quote, "Well, Charlie, I have had this discussion on a lot of things. We bought some stocks we really don't know how much about, but I'm not really comfortable doing that all." Unquote. Charlie, "We've used to shooting fish in a barrel, but that's gotten harder." Buffett, "We've got probably 10 to 5% of our total assets and cash beyond what I would like to have, just as a way of protecting the owners and the people that are our partners from ever having us ever get in the pickle. You know, we really run person to make sure that we don't want to lose other people's money, who will stick with us for years. We can't help somebody doesn't buy it today and sells it tomorrow. But wait, we've got a real gene that pushes us in that direction. But we've got more than we've got probably 70 or 80 billion, something like that maybe, that we've loved to put to work. But that's 10% of our assets roughly. And then we probably won't get. We won't get a chance to do it under these conditions. But conditions change very, very rapidly sometimes in markets, and we do have people that would like us to join, but the market option they have is just too great for them. And if they're publicly traded, they basically can't, they would have great difficulty. Well, then making a deal with us because somebody else would come along with using other people's money. It's, we may be unhappy about the 70 billion, but we're very happy about the other 700 billion. So it's not like we should explain. So Buffett has a distinct approach that it uses. Since he first read Benjamin Graham's book, The Intelligent Investor, when he was just 19 years old, Warren Buffett has made it his mission to identify undervalued stocks. He had invested in stocks that are available for less than their real value. Let's face it, there aren't many of those deals available in today's market. The S&P 500 is currently at 46. That is 3 times more than the historical average of 15 people, and this is the second highest point in the last 140 years for them. Buffett's approach is therefore extremely unusual in current times, with $138 billion in cash on hand, deliberately choosing to wait and let that cash reserve grow into something even Jerome Powell would be proud of. And in essence, he is watching for a company to open up that offers a good deal, ideally a huge blue chip, one so he can invest the most of his money. However, at the moment, it seems that none of these companies are operating because they are all asking for exorbitant amount. Buffett ignores these and solely concentrates on the market segments that are profitable. Buffett, "Yeah, just raise your hand and the monitor will supply the microphone. Charlie, and I've had in investing, there have always been hundreds of cases or thousands of cases of things that are ridiculously priced and phony stock promotions and the goal of being led into the belief in things that just can't come true. So that's always gone on, it always will go on. And it doesn't make any difference to us. We are not trying to predict markets. We never will try and predict markets. We are trying to find wonderful businesses, and the fact that a part of the market is kind of screwy. That's unimportant to us. We tried a few times shorting some of those things in our innocence of youth. And it's very tough to make money shorting the obvious frauds, and there are some obvious frauds. And it's not tough. It's not tough to find the obvious frauds, and it's not tough to be right over 10 years, but it's very tough to make money being short them. Although we tried a few times way back, we don't look at indicia from stocks in general, or from PE or price sales ratios, or what other things you're doing. We really just focus on businesses. We don't care if there's a stock market. I mean, would we want to own Coca-Cola? The 8% we own a Coca-Cola. 11 Gillette, if they said we're just going to delist the stock and we've never gonna know. We'll open it again in 20 years. It's fine with us, and if it goes down on the news, we'll buy more of it. We care about what the business does. Yeah. Give you an idea of how Buffett's strategy functions by going back to 2008. Thus, the market was quite expensive in 2006 to 2007 because Buffett was having trouble finding agreements. He held his money in short-term treasury bonds, which are regarded as equivalent to cash. Buffett has $45 billion in cash on hand and available for use in 2007, thanks to Berkshire. That sum of money was significant at that time for his investing business. After that, as we all know, the big financial crisis strikes and stock prices plunge, and Buffett began making frantic stock purchases. By 2009, the amount of cash on hand had practically halved to $24 billion. Buffett is likely one of the most patient investor there is. If there aren't any deals available, he's willing to let his cash reserve grow until one materializes. He admitted in the interview that he had attempted to short stocks when they were blatantly overpriced, although predict how long they will last. Similar to how some tried to make money by shorting Tesla in the past. They believed it to be enormously overrated. Therefore, they assumed it wouldn't work out. The shorts failed. As Buffett said, it's tough to make money shorting stocks. When he thinks the market is expensive, he enjoys doing what he likes to do, is to look for those specific industries that might present an opportunity. As we can see from the past year, Buffett did engage in some stock purchases. He invested in companies that provided financial services, such as Eon and MMC, telecom services, such as Verizon and T-Mobile, consumer goods, such as RH and Kroger, and pharmaceuticals, such as AV Maersk and Bristol Myers Squibb. Therefore, there are still certain industries that present opportunities. However, you must be ready for it. Like Buffett, he spends his days in his office reading reports, going over various stocks, and hunting for bargains. He has discovered a few, but not many, and his main activities are saving money and waiting for an opportunity to arise. Which aspect of this subject have you found to be very useful? Please let me know in the comments section below. And if you like this video, please give it a thumbs up, turn on the notification bell, and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.